Ladies and gentlemen, good day and welcome to the Century Enka Limited Q2 and H1 FY26 earnings conference call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out this conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectation of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand the conference over to Tushar from Ventura Securities. Thank you, and over to you, sir.
Thank you. Good day, ladies and gentlemen. On behalf of Ventura Securities, I welcome you all to Century Enka Limited's Q2 and H1 FY26 earnings conference call. The company is today represented by Mr. Suresh Sodani, Managing Director, and Mr. Yogesh Shah, Chief Financial Officer. I would now like to hand over the call to Mr. Suresh Sodani for his opening remarks. Thank you, and over to you, sir.
Good morning, everyone, and welcome to our earnings conference call for the second quarter and first half of financial year 2026. I would like to thank our host, Ventura Securities, for hosting this call. Now, let me brief you on the operational highlights for the second quarter FY26. During the quarter, revenue declined compared to the corresponding period in the previous financial year. In the tire cord fabric segment, volumes continue to remain impacted due to subdued demand and higher imports from China, though we did witness some improvements compared to previous quarter. Margins also remained under pressure on account of these low-cost imports. However, with the recent GST reductions on tires and improving outlook for the auto industry, we are seeing early signs of recovery in tire cord demand. We expect the second half of the year to be better, supported by festive season and a favorable monsoon, which should boost rural and farm incomes. That said, continuing geopolitical and trade tensions, along with tariff-related uncertainties, remain a key risk for the value chain. Meanwhile, the approval process for PTCF is progressing well and remains on schedule. In the filament yarn segment, sales volume improved sequentially following successful restart for our plant after the fire disruption and subsequent revamp. Our recent investments in mother yarn and value-added products have contributed to better margin realization during the quarter. However, margins on commodity products remained under pressure due to significant increase in low-price imports from China, both year-on-year and sequentially. The industry, along with relevant authorities, is actively pursuing imposition of anti-dumping duties to address the issue of low-price dumping from China. On the raw material side, caprolactam prices continued to decline to record low during the quarter, though the rate of decline has moderated. Our renewable energy initiatives at Bharuch plant have aided in controlling power costs and improving cost efficiency. Additionally, our continuous focus on operational efficiency and process optimization has helped offset some of the margin pressures arising from volatile raw material prices. I now request our CFO, Mr. Yogesh Shah, to brief you on financial performance.
Thank you, and good morning, everyone. Let me now brief you on the financial results for the second quarter and first half of the financial year 2026. For the quarter under review, the operating revenue stood at rupees 409 crores, which declined by almost 24% year-on-year and increased by 2% quarter-on-quarter. EBITDA for the quarter stood at rupees 32 crores, which declined by around 17% year-on-year and increased by 59% quarter-on-quarter. EBITDA margin were reported at 7.73%. Profit after tax was around rupees 22 crores, which increased 4% year-on-year and 45% quarter-on-quarter. The PAT margin stood at 5.46% for the quarter. For the first half of FY26, operational revenue stood at rupees 810 crores, declining by 24% year-on-year. EBITDA stood at rupees 52 crores, which declined by around 35% year-on-year. EBITDA margin for the period was 6.37%. Net profit was rupees 38 crores, down by 17.5% year-on-year, and PAT margin stood at 4.65%. Total volume for H1 FY26 declined by 14% year-on-year to 34,992 metric tons. Tire cord fabric sales for H1 FY26 declined by 32% to rupees 365 crore, while filament yarn sales declined by 16% to rupees 404 crores. With this, we open the floor for questions and answers.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. The first question comes from Mr. Vipul Kumar from Sumangal Investments. Please go ahead.
Hi, sir. Good morning. Thanks for the opportunity. So, what type of volume we can expect in this quarter? And what was the caprolactam price in last quarter, and what is the price this quarter, and what is the outlook? And had we any inventory gain or loss during the second quarter?
So, while we do not give any forward-looking statements in terms of volumes or realizations, we do expect better volumes compared to quarter two, mainly from the reinforcement market, as already mentioned in the opening comments, that post GST there has been initial uptick in terms of demand, and we expect that once the inventory in the pipeline gets normalized, it should reflect in more production both as a tire companies and also all the raw materials that are required for tire manufacturing. So in that light, we expect better volumes. But as I said, there are so many variables, particularly the geopolitical tensions and the current continuing uncertainty on US tariffs. So these two will also have an impact on the volumes for the industry. As we mentioned also, we are pursuing the anti-dumping duty on NFI, and since the pricing and the volume increase is significant, pricing pressure and the volumes, so if any positive developments happen on that front, that could also support the volumes on the NFI segment. As far as the caprolactam is concerned, it was in the range of about $1,200 for the quarter. We expect that it should not go down significantly now because it is one of the lowest levels with the underlying raw materials which go into manufacture of caprolactam. But international oversupply could be one of the reasons that the prices could come down further. But as already mentioned, the pace has come down. It is not falling at the same pace that it was in Q4 and Q1. So hopefully we may be close to the bottom of caprolactam cycle, unless there is a completely different pricing scenarios in the crude oil value chain. We did not have any significant impact on the fall in our caprolactam prices because we had reduced our inventory levels, and since our value-added products have done well, we did not have to do any significant inventory losses for the quarter.
So, what is the status of the anti-dumping duty plea by the industry and the company? So, and what is the level of protection the company has asked for?
So the level of protection is always determined by the ministry, by the DGTR. We only give the base data and then they do the calculations. All the interactions with the industry players, with the producers, with the consumers, collection of data is at almost the final stage, and all the data that was required from the industry side, all the players in the industry have already been submitted. The import data is already more authentic data is available with the government authorities. So we expect some positive developments in quarter 3, hopefully before December.
So if anti-dumping duty comes, then we can expect substantial improvement in the volume, sir?
Our volumes for NTCF are not dependent on anti-dumping duty. The this anti-dumping is only on the nylon filament yarn. So more importantly, the margins pressure that is there on the commodity products. While our VAPs and new investment are able to compete even at low priced imports from China, the commodity products which are mainly coming from China at very, very low prices should help the margin improvements, particularly in certain segments. But we would have some improvement in the volumes as well. But since the major volume impact is on the reinforcement side, that we expect should pick up through the improvement in the demand from the auto sector and the replacement market.
So just for clarification, are we seeing dumping by Chinese player in both yarn and reinforcement market?
Yes, but more in the yarn side. We are seeing more dumping on in fact, the volumes have doubled on year quarter on the yarn side. That kind of intensity is not there on the tire cord side because it's more a technical product. Yarns, especially the commodity yarns, are significantly volume has gone up.
So industry has asked anti-dumping duty on yarn, not on reinforcement. Is that understanding correct?
Yes.
Okay, and what is the status of this PTCF approval, sir?
So it is going on. We are working with 2-3 tire companies, and we expect some commercial supplies to start in quarter 4.
So it will start quarter 4, right? Yeah.
Yes, we are hopeful of that as of today.
And PTCF will have better margin, right, sir?
PTCF is a reinforcement, so it will have similar reinforcement kinds of thing. But since we have invested in it, it will start giving some positive to the top line and the bottom line of the company.
So PTCF will add to the margin or it will add to the volumes? So
both. I think it will add to both.
So what is our capacity of PTCF plant at full capacity?
We do not give product-wise breakups because of competitive reasons. But it would be about 10% of the industry demand.
10% of the industry demand?
Current demand, yes.
Okay, sir. Thank you. I fall back in the queue.
Thank you.
Thank you, sir. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Mohit, an individual investor. Please go ahead.
Good morning, sir. Hope I'm audible.
Yeah, good morning.
So just one, I had a question on the demand shaping up in H2. So, like, how do you see the demand trend shaping up in H2, especially after the GST cut on tires and the festive season impact?
So we did see some positive uptick both at the retail sales as well as inventory liquidation at the tire companies. And since there was a lot of waiting for the GST cuts to kick in, so that all happened only during the last week of September. Since 22nd it became effective. But we are expecting, the initial signs are good even for October. And we are hopeful that the trends that have come should continue for other months and the quarter following that. So we are quite positive that GST should help in improving the demand for particularly for the tire cord segments.
Okay, and what are your expectations for NTFC demand? So recovery now for that inventory adjustment, tire manufacturer is largely complete. So what are your expectations on that?
Actually, the tire companies are also waiting for clear signals that the demand is sustainable for ramping up their production. So, I mean, we'll know more from in this month as well as in December whether the demand that uptick which happened post the GST cut is sustained or not. But there is a general positivity amongst the value chain that this should sustain and lead to better demand.
Okay. And lastly, what was your EBITDA margin improved sequentially or to 7.7% in Q2? So just a general layman question that what drove this improvement in H2?
Mainly,
and is it sustainable in H2? Yeah.
See, the improvement that you see is mainly because the raw material prices have fallen, but the margins kind of remain at almost similar level, whether the caprolactam is at 1200 or 1500. So the top line, the denominator value comes down, then the margin looks better. So
Okay.
that is the main reason. Yes, the volumes have improved because our NFI post fire at Bharuch we restarted, so we got volumes for that in this quarter. But the main driver for a certain significant increase in margin has been the low-priced raw materials.
Okay, sir. Okay. Thank you. That's from my end. Thank you very much.
Thank you, sir. The next question comes from Mr. Anish, an individual investor. Please go ahead.
Hello, am I audible?
Yeah.
Sir, yes, my question was, sir, what is the company's pricing strategy to counter cheap imports from China in both yarn and tire cord segments?
So in the yarn, it has been always that we want to move up to value chain in terms of more specialized products, and our investments in value-added products, mother yarn, has been towards that end, and that has given some benefits in this quarter as well. Otherwise, the pricing on the commodity products is still highly challenged because of the very cheap imports from China. So we will continue on improving our value-added products portfolio and also offering niche products to the customers which are difficult to import or which are more customized for the customer. So that would continue to be our strategy for nylon filament yarn. As far as the reinforcement is there, we continue to work to provide superior service and better quality compared to imports. But since these are technical products, these are basically driven by the tire companies on what specifications are required. While we are the main driver would be increase in the demand for the tire cords itself. And our investments, particularly the new investment that we have made in polyester tire cord, which goes in passenger car tires, is directed towards increasing our offerings in the tire reinforcement market. So going forward, our focus would be, if this project really does well, then the expansions and the growth will come from the polyester tire cord segment, which we will wait once the current investment starts paying for and shows good traction in terms of demand and capacity utilization. But that's the major thing that we would be doing. We would look at other verticals as well, but that is still at a very preliminary evaluation stage because we are part of technical textile value chain. So we would look at opportunities that could arise by utilizing our current yarn capacities which are going into the tire cord segment.
Also, so I had one more question. So what is the current status of the PTCF approval process, and when do you expect to commercial supplies to begin?
I mentioned in the previous question with the previous speaker is that we expect commercial supplies to start in Q4.
Thank you, sir.
Yeah. Thank you.
Thank you, sir. The next question comes from Mr. Vipul Kumar from Sumangal Investments. Please go ahead.
So what is the capex we have incurred for PTCF projects, sir? And what should be the...
Approximately 100 crores.
Okay. And what is the expected IRR on that?
We have an internal target of IRRs of more than 12%. I will not be able to give any specific number, but it was in excess of that.
And you mentioned value-added products. So value-added products means that is for only nylon filament yarn, right, sir?
Yes, right.
So out of the total volume of NFY, what percentage of our volume is value-added products, and what type of higher realization you get in percentage terms as compared to commodity for that particular volume?
So again, without being very specific, it's over 35% of our portfolio is in value-added products, and we get good margins which justify additional investments into value-added equipments to make this. So as we said, we have internal minimum threshold that it has to be crossed, and these are much higher than these values, and that helps in improving the viability of the NFI segment.
So then should we assume that commodity part, that 65%, rest 65%, which is commodity business, we are incurring losses on that business?
No, I will not say that, but I also not give any. We don't give any breakups in terms of product wise. But no, we are not incurring losses, but margins are very less.
So last question means after 2-3 years, what percentage of your NFY volume will be value added, sir?
We expect it to cross 50% or even more. So we are continuously investing. We have been investing in last 2-3 years continuously on that. So we expect it to cross more than 50%.
So what type of capex we have done over the last 2-3 years to make these value-added products?
Almost close to 50 crores, 3 years, in over 3 years.
Okay. Thank you, sir.
Thank you.
Thank you, sir. The next question comes from Falguni Datta from Mansarovar Financials. Please go ahead.
Yeah, good morning, sir. So I just missed on the capex on the PTCF project. Hello?
Ma'am, please stay connected, ma'am. The management got disconnected. I'm dialing him. So welcome back to the call, sir. Please go ahead.
Hello?
Yes, sir. I just missed on the capex on the PTCF project, sir.
Yeah, I mentioned it's about 100 crores for the entire process.
Okay. Entire the project.
Yes.
Okay, sir. That's all from my side. Thank you.
Thank you.
Dear participants, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Krupa, an individual investor. Please go ahead.
Hello.
Yes.
So actually, I just wanted to ask one thing, that you have maintained a very strong cash position and limited debt. So how do you plan to deploy the surplus cash? Will it be towards capacity, buybacks, or any dividends?
So, we have followed a consistent dividend policy that would continue, but mostly this would get deployed in new projects because we see a lot of opportunities in growing this company in new segments or into new verticals. As and when we are able to conclude with the senior management on what or the senior board on what really could be utilized for. But the main focus has been to utilize this cash for growing this company and becoming more sustainable and profitable in future.
Got it. Also, how much of your power requirement is now met through renewable energy, and what further savings are you seeing from this transition?
So currently, on a totality basis, about between, since it's variable, between 15 to 20% of our total power requirement is met by the renewable power. And we intend to, in the next between 1 to 2 years, take it to at least about 30 to 35% of the total requirement.
Sure. Thank you, sir. Also, how do you see the caprolactam price trends evolving, and what is the potential impact on the gross margins also going forward?
As I mentioned in earlier question, we think that it is close to the bottom because the margins over the raw materials for caprolactam are at, again, historical low. So all that the caprolactam, even in China, does not have a significant margin. So we expect that possibly it is close to the bottom and it should only go up. However, since if it remains at this, we don't expect any further losses on our stocks. In fact, if it goes up, it would be supporting the company.
Got it. Thank you so much, sir.
Thank you.
Thank you, ma'am. The next is the follow-up question from Falguni Datta from Mansarovar Financials. Please go ahead.
Yeah, sir, is it possible to get the total domestic nylon filament yarn demand and the annual imports?
So, there is no we collect our data from multiple sources. So, the demand is around just under 2 lakh tons per annum. And the imports, and on an annualized basis. And the imports have been close to between 30 to 35% of the demand.
Okay. And this 35%, it is for this year, or what would be normal, like let's say average?
Normal is between 15 to 20%, and it has almost doubled in, at least on the quarter-on-quarter basis. We still have to see the balance 2 quarters. But compared to quarter 1 and compared to quarter 2 last year, almost, from again the import statistics only, the imports corresponding to quarter 2 last year is more than 100% increase, and compared to quarter 1 is more than 50% increase.
Okay. And sir, it will be mostly from China? Most of it we can say?
Yes. Almost 90 to 95% is China.
Sir, and what to your mind can turn this? Suppose, without the dumping duty in place, let's say, what is it that it happens and it can change this situation? Is a capacity reduction of capacity expected in China? Because unless the demand improves there, we cannot expect this to come off, right?
So actually, yes, there is a huge overcapacity in China in the filament yarn segment. One of the things which could change is if the China-US tariff were to get sorted out, because a lot of exports of fabric which was produced using these yarns, either mostly in China, have been impacted by this tariff situation between US and China. So that surplus is actually flowing to India and some other countries as well. India is also a growing market, so becomes a natural, and with very low duty protection is vulnerable to this high imports. And that's why this anti-dumping duty has been pursued by the industry.
Okay. And sir, similarly for tire cord, is it possible to give the total domestic demand and imports?
Again, the estimated domestic demand is in the range of 1.3 lakh tons to 1.5 lakh tons, again, depending on seasons and quarters. But I think it's about 1.5 would be the right estimate.
And this will include both nylon and polyester?
No, mainly nylon. Polyester would be additional about 40,000 or 35 to 40,000 tons. That could be the demand. And the impact, sorry, you asked another question. What was that?
And the other was on imports of these.
So imports of this is about continues to be about 20 to 25% in particularly in the nylon tire cord fabric.
And this is also the normal range?
Yes, it is. I mean, it has gone up about 5%, but it is not as significant increase as compared to nylon filament yarn.
Okay. Understood. Thank you, sir. That's all from me.
Thank you.
Thank you. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. Again, the follow-up question comes from Vipul Kumar Shah from Sumangal Investments. Please go ahead.
So what is our current capacity utilization in both tire cord and filament yarn division, sir?
We do not give, we report our results in one segment, so we only given the additional information in terms of the turnover. So against a capacity of 92,000 on combined basis for all products, our production was for the quarter, sales volume was about 17,920 tons.
Okay. So annualized it will be 68,000, right? So out of 92,000, so we are currently working with 65-70% capacity utilization.
Currently, close to. Because quarter 2 was slightly better, and because the restart. So, about 72,000. If I were to just multiply 18,000 into 4. So 72,000 on 92,000. But that was not necessarily the way it may work. It could be higher, lower, depending on a lot of other things.
Okay, sir. Thank you.
Yeah. Thank you.
Thank you, sir. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. Again, the question comes from Falguni Datta from Mansarovar Financials. Please go ahead.
Sir, if you can name a few more, let's say 2-3 players in this, both in NTC, nylon tire cord and filament yarn in India. Bigger players, if you can mention 4-5 names. Or is it very fragmented?
No. In reinforcement market, there are only 2 other players. One is a listed company called SRF. They have a division called Technical Textiles. But they have multiple products in that. It is not just tire cord. Multiple technical textile products are there. And then there is Madura Industrial Textiles, which is a private limited company. Not listed. In that is the only 3 players in domestic market, suppliers. In nylon filament yarn, it is fragmented. But PNP, Orilon, these are few companies who are, but most of them are privately held. They are not listed.
Okay. Thank you, sir.
Thank you. The next question comes from Anish, an individual investor. Please go ahead.
Yes. Sir, I have a follow-up question. So, from a strategic standpoint, how does Century Enka plan to position itself in the technical textile segment over the next 2 to 3 years?
As I said, we are evaluating what segments are attractive, where we can make real good entry, which is long-term, which is sustainable, profitable. So we are still evaluating. We already have the tire cord fabric itself comes under technical textile domain, and the yarns that we use for making tire cords could be used for other technical textile as well. So we are evaluating that. As and when we have any concrete proposal and post approval of the board, we would announce it through the normal routine channels.
Thank you, sir.
Thank you, sir. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. So there are no further questions. Now I hand over the floor to Mr. Suresh Sudani for closing comments.
Thank you everyone for joining our earnings call. I hope we were able to give the answers to your queries, and I hope those were to your satisfaction. If you have any further questions or would like to know more about the company, please reach out to our investor relation manager at Valorum Advisors. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation. You may disconnect your lines now. Thank you and have a good day.